Bhaumik, let me address the issue with you as well in terms of trend spotting now. Given the momentum that we're already riding on, what would you say that we need to focus on? And more importantly, what will you be watching out for? What are those headline numbers that you're going to be watching out for?
I think a few things that we've been seeing for the last couple of years. We've all been amazed at the resilience that Indian corporates has shown through this significant headwinds that have been faced. And even as we were seeing significant upgrades to the ratings and people were a bit skeptical about that, I think a lot of that has actually borne out. I think what we continue to watch is the way Indian corporates are taking advantage of the opportunities. Mr. Acharya talked about engineering opportunities, and we're actually seeing that in capital goods as Indian entities have, I think, order backlogs up to the next 4 years, supplying transformers and other equipments for renewable capacities in the US. There are opportunities on the consumer side, not the staple part, but on the aspirational products where people want to upgrade themselves. Infrastructure, of course, would continue. Cement, steel, power, of course, is seeing a major transformation. I think this is indeed a good time. From a rating agency perspective, I suppose one of the things we would see from a policy, and we have very alert regulators, one of the things we would continue to like to see is balance sheets continue to be buffered up through counter-cyclical strength, so that whenever a downturn comes, or if an idiosyncratic event were to hit either through cyber frauds or governance issues, entities are better prepared. So we would like to see those buffers being even more strengthened. You know,
you said that this is indeed a good time for India. Let me go back to very recently, I think just about 2 days or 3 days ago, the chief economic advisor has basically said that rating agencies don't seem to acknowledge the fact that India has done actually very well and should in fact be changing their stance and their position on India. How do you react and respond to that?
I don't have a sort of a ringside position on that, because I don't sit in on the rating committees. I'm sure rating agencies are listening to this long and hard. And I think the criteria that they adopt is transparent and is well explained. But I think the bigger point is, if you look at the articulation that rating agencies are making at this point, I think it's become a lot more balanced, a lot more benign now. People understand the benefits that growth is bringing in, and all they want to see is that it's a narrow, limited point of the balance sheet of the government, whether that is going to adhere to a declared path, and whether that path is going to be sustained and confirmed.
Mr. Khara, let's talk about the road ahead now. There is a meeting with the finance minister on the 30th of December. I would imagine that that's stock taking about the year gone by as well as what the year ahead looks like. But outside of the next few months, what needs to be prioritized now from a banking sector's perspective? The unfinished reform agenda, for instance, on the insolvency code, there are amendments that have been sought, amendments that have been spoken about, discussed. You know, what should the road ahead look like now in terms of priorities from your perspective?
Well, I think one, of course, we have to support the growth initiative, and we are very clearly, there's a lot being talked about the private sector investment. So if I may say, from this forum, we have got a very clear visibility in terms of the fresh proposals coming in. What we have actually seen is that the private corporates, they had a lot of cash sitting in the balance sheet. First and foremost, the investment happened by deploying that cash. And now they have come to a stage where they have understood the growth opportunity which is there, and we are very much there to support their such initiatives so that the private capex should now take off. This is what our first priority is. And of course...
but we've been waiting for that takeoff. I mean, it's been, in the words of the chief economic advisor, incipient signs of private capex picking up. When do we start to see robust signs of private capex?
In fact, that is what I'm saying, that, you know, until now, we have seen that the investment has happened from the internal resources. As Mr. Gurdeep Singh also said, that there is a huge capex lined up for the next financial year. And similarly, I would say that many other public sector entities have also lined up the capex for the next financial year. The way I look at it is that it is going to be a blend of both the public sector, government, and also the private sector, but we will get to see more private sector investment also coming from the banking system as well. So that is one priority. And second, of course, digital is something which has been one of the very forefront for all of us. And we have invested well in terms of upscaling ourselves as far as the digital capabilities are concerned. And of course, all said and done, the cyber is one area, cyber risk is one area which all of us need to really guard against, be it banking or non-banking entity, any entity, because today there is a huge dependence when it comes to the operations of any entity on the information system. So we have to guard against that. That is another very important priority for us. And I think the other area where we all need to work on is how to make the organization digital-driven organization in terms of leveraging analytics. So that is one of the other very core focus area for us, to understand the customer better and offer them the products which they are all looking for.
So if I can just focus on that, because that's the running theme as far as this panel is concerned, that a lot of the growth will be driven by technology, and also the technology transformation that banks like yours and other companies will have to undergo. You know, how much are you investing in technology today, for instance? What do you foresee that to become over the next 5 years? What will that mean in terms of bank branch expansion? What will it mean in terms of workforce allocation, reallocation? You know, lay out for me what you envisage the next 5 years to mean, and what technology will do for you.
Thanks to digital, today we are bank of our size. We have got almost about 88% of our transactions are digital. And 98% of the transactions are happening outside the branch. But if somebody asks me whether we don't need so many 22,400 branches, my answer is no. Because the kind of diversity of customer base whom we serve, we have to have the physical presence. And let me share with you, when it comes to financial sector, unless and until there is a physical location of an office in the far-flung area, the ability of a brand to get the confidence of the customer is rather very difficult. So I think from that point of view, after all, since we deal in a fiduciary capacity, we deal with the customer's money, our presence on ground makes a whole lot of difference. And also, having said that, I must also mention that the country needs a lot to invest in terms of financial literacy. And from that point of view, the public sector banks have done a great job all this while. But if you ask me whether we have completed that, I think still there's a room for improving that financial literacy. So I think to that extent, we will have a coexistence of digital as well as physical. So that's why phygital is going to be a reality for us, for all the banking system. Having said that, I must also mention that when it comes to what you mentioned, what will really engage us for the next 5 years, to my mind, there are many repetitive jobs which are being done at a bank. So I think the Gen AI is going to be the next big talk. We have started...
Next big talk or next big thing for the bank? Have you already started to incorporate?
We have already started working on it. So that is something we actually started working with the analytics in a big way. And now we are moving towards the Gen AI. So I think in the next 5 years, we'll probably see that unfolding. And probably it will help us in addressing the customer's need. And also will probably shape up the way banks will be run in the days to come. So many of the repetitive jobs we will have, probably will get to see the distributed ledger very much in adoption going forward. We'll get to see Gen AI getting implemented in the banking system, and we will get to see the data-driven organization as far as the banks are concerned. So which will actually show up in terms of our ability to manage risk, ability to understand risk, ability to understand the customer's behavior, and also figure out the exceptions in no time. So which will also address part of the risk which are there in the digital.
Let's talk about the manufacturing story, because as I pointed out that you are a beneficiary of the PLI and you hope to start building that out. Over the next 5 years, you know, what is the kind of potential that you hope to unleash here from India as far as the export market is concerned? You've got collaborations with HP and, with Google and others, and you are manufacturing for them here as well. What do you foresee that to result into over the next 5 years?
I think one of the disruption which PLI is going to be bringing is on the semiconductor industry. While we all understand, and semiconductor is the backbone of any technology and IT adoption, starting from your IoT devices to handheld devices or to any largest data center. And that was the one place where probably India has not done well. While on technology adoption, India was always ahead. Software technology development, we were all ahead. But semiconductor is something which we are behind. And if this PLI goes the way government is trying to drive in next couple of years, India is going to be the strongest base for the semiconductor technology, starting from R&D to development to manufacturing of those things. And most of the tech companies are taking the advantage. And this is one of the reasons why I was saying that this quarter, India has become #1 in terms of the manpower deployment globally, because we have moved a large number of resources in the core tech side, on the core development and R&D from the various parts of the globe to India. And we are seeing the same trend happening in the semiconductor industry and technology side. And over a period of time, we feel that this is going to really fuel the growth for next 10 years, the way we are saying. And as per the word estimate, and IMF has already made the estimation by 2026-27, India is going to be the third largest economy, global economy. And we feel that this PLI scheme, specifically in the tech side and in the semiconductor, is going to be fueling that growth.